Okay. All right. Now, can everybody hear me okay? I'm assuming that we can. Sally, do you have a hand or do you have a question or are you just raising your hand right now? Okay. I think you're muted. So you're going to have to unmute yourself. Actually, type it in the chat so we can go ahead and get started. That way we can come back to it. All right. All right. So first off, I want to thank everybody for showing up to the webinar. I know you probably see a lot of information on Facebook, and you don't know what information is legit, what information is not legit. But we wanted to put this on to be able to show you guys how to get the best deal in real estate with the program that we offer. All right. So, all right, who's unmuted? Let's see here.
I need to get off there.
Okay, so welcome to Savings. I mean, in this home buying seminar, what you're going to learn is how to get the best deal in real estate. And what we're going to show you or teach you is how you can save thousands of dollars on your next real estate transaction. Okay. All right. A little bit about myself. My name is Mike Price. I'm a loan officer. My license number is 244007, just so we can be legal in here. I'm also a realtor, real estate license in Texas, 720-851. I actually own LTI Mortgage. We're mortgage brokerage, right? So in our brokerage license, 1906 858. I'm a graduate of Texas A&M University, class of 2000, and creator of the Hybrid Agent program. Now, this program is designed to help you save a ton of money on your closing costs. All right. Now, a little bit brief about us. I mean, LTI Mortgage, full mortgage broker. We're based in DeSoto, Texas. We've got access to a majority of the programs out there: conventional, FHA, USDA, jumbo, some non-QM products. For those of you guys who don't know what non-QM is, that's like a bank statement program, or for people who won't qualify on just your typical programs. All right. Now, one thing you got to know is, as an actual mortgage broker, right, our pricing is going to be better than our competition because our overhead is a lot lower. We don't have big, huge buildings that we've got to finance. We don't have a huge staff of 30, 40 people that's got to get paid on each and every loan. So that means we get to be able to offer you better rates and fees than most lenders that you're going to see. A rule of thumb: if they're advertising on TV, advertising on radio, you're going to pay for that. So the rate's going to be higher and the closing costs are going to be higher. Because all that stuff costs money and that stuff gets passed down. Now, our mission in the mortgage business, we understand, hey, there's a ton of companies out there. Everybody's trying to get your business. Our deal here is just to be the best mortgage loan for your specific situation, because everybody is going to be different, regardless of what your neighbor may have gotten on their loan, what your brother, your sister may have gotten. Your credit score is not going to be the exact same. You're not putting down the exact same amount of money, and every loan is different. So we just want to be the best and be able to come in and get you the best deal while educating you and making sure that you're completely satisfied in that process. Okay. Now, our agenda for tonight, what we're going to be doing here is we're going to show you how to save on closing costs, how to get out of PMI with only putting down 5%. Most people think you got to put down 20% to get out of PMI, and that's just not true. How we can get you a lower interest rate, how you're going to bring less cash to closing, and overall just how to save on the overall closing costs of the loan itself. Now, what is our hybrid agent program? Okay. Now, the hybrid agent program, I know you saw this video on Facebook, but the hybrid agent program is a program that I came up with to help people save a lot of money. And the way that we do that is because we're licensed both in mortgages and on the real estate side. So we've got an actual dual license. So we can do both the mortgage and we can do the real estate. Now, so when we do both the mortgage and the real estate, we're going to get paid twice. We're not hiding that. There's no doubt about it. But what we are going to do when we do that is we're going to give you up to half of the real estate commission, and we're going to apply that to go towards your closing costs. Okay. And we're going to go a little bit deeper into that in a later slide here. All right. So how does it work? All right. Now, a mortgage loan consists of three components. You've got your down payment, you got your interest rate, and you got your closing costs. And those are the main three things that most people know about. All right. Now, the down payment, that's the amount that's required for you to put down on the home. I mean, typically it can be as low as 5%. Now, depending on the type of loan that you're doing, if it's an FHA, you can put down 3.5%. Or if you're doing a VA loan or a USDA loan, you can come to the table without putting any money down. Now, obviously, restrictions apply. Basically, for VA, you have to be a veteran and you have to have eligibility. USDA, the property has to qualify. Typically, those are outside of the city limits, like what most people would call, I guess, the country, or just on the outskirts of the city. And you have to know those properties before you go in, because we would have to look those up to see if they actually qualify for USDA. Now, here's the kicker: when there's a down payment required, you cannot bring less money to the closing table than what's required. Okay, that means you have to bring at least that amount. Now, an example: if we're having to put down 5% and the home is $100,000, we know these don't exist anymore, but just for easy math, if it's $100,000 and you've got to put down 5% at minimum, regardless of what the closing costs are, you have to bring at least $5,000 or have at least $5,000 invested in that transaction. Okay. Now, on closing costs, the closing costs those vary from lender to lender. Now, those are the expenses over and above the property's price. And a lot of times those include like your loan originations fees, your discount points, appraisal fees, title searches, homeowners insurance, surveys, taxes, recording fees. There's a ton of fees that are going to be associated with that loan that are considered closing costs. And like I said, a lot of these vary from lender to lender. The bigger the lender is, the more those closing costs are got to be, because they have to up those costs to pay the bills and pay everybody that's going to be associated with that loan. Now, how can we as a hybrid agent help you save on the closing costs? All right. So what I'm looking at here is on, just say, a $400,000 house, right? Just say your closing costs are $6,000 and you got a 5% down payment. All right, so that 5% down would be $20,000. And don't let these numbers blow you away. I'm just using these because they're easy for me to do math-wise. All right, and that's 400,000 times 0.05. That gives us a 20,000. All right, that makes your total cash to close $26,000, right? So we had the closing costs, $6,000. Now we have a $20,000 down payment. That's the second component. First component is going to be the closing. Second component is a down payment. Your cash to close right now is $26,000. Okay. Now, as a hybrid agent, remember, we're going to be paid twice during the transaction. So once we close this loan on the real estate side, we're going to assume that we got this $12,000 commission. That's 3% of $400,000. Right, so that's $12,000. We're going to take $6,000 of that commission and apply it towards your closing costs. Now, if you look back on this left side, you had $26,000. That's $20,000 down payment plus $6,000 of closing costs. Well, if we took half of that commission and applied it to that, the only thing you're going to need at closing would be the $20,000 that is the actual down payment, because we covered all the closing costs. Now, what deal sounds better to you? Now, this is buying the exact same house on the exact same street, the exact same everything. The only thing you're doing is using a hybrid agent. What makes more sense to you, to bring $20,000 to closing or bring $26,000 to closing? I mean, I think I'm on with some pretty intelligent people, and obviously bringing $20,000 to buy the same house just makes total sense. Now, how do we help you get a lower interest rate? All right. Now, interest rates, those are going to vary from lender to lender as well. The bigger the lender, the higher the rate's going to be, because they got to pay more people. It's just that simple. Now, as a mortgage broker, we've got lower interest rates because we have lower overhead and we don't have buildings and all these people that we've got to pay for. And so what most people don't understand is you can buy your interest rate down. And once you go in to buy it down, now that's part of your actual closing cost. So you can use points. Points can save you money over the life of the loan, and that's just by buying down your interest rate. And so, like I said, it's part of the closing cost. Now, also, as a hybrid agent, we're going to get paid twice. So in a situation to where you don't want to use the $6,000 to buy the actual rate down, you don't want to use the $6,000 to kill all the closing costs. You want to use some of that money to use this deal to make it last you a long time. And so you can use that money to buy your interest rate down. And so instead of you saving $6,000 out of from the start of it, you can buy that rate down and save yourself money long term. And so if you look at savings, just say $60 a month over a 30-year period, I mean, that's going to add up. And so in this example that I put together for you down here, if we took your rate from say 299 to 2625, I mean, that's $75 a month, right? So would you rather pay $75 or $74 more per month than you need to? And so just looking at that, we just took $6,000 in this scenario. All right. Now, $74 times 360. 360 is the amount of payments in 30 years. Okay. So we took 74 times 360. We took $6,000 that we were going to give you, and now you just saved $26,000 on the price of the on the actual mortgage payments, and that's $26,000 over life. But what we did is, instead of us bringing less money to closing, we just applied that money towards buying the rate down, and so now you save $74 each month. And most people don't realize it, and most people are going to say, "Hey, it's only $74." All right, but $74 each and every month, that number adds up quite a bit. All right. Now here is, and once you guys do a loan with us, this little photo that you're looking at, this is one of our software programs that we use. It's called Mortgage Coach. Each and every one will get one, and this way we'll be able to show you the actual savings. All right. So what you're looking at right here on the left-hand side is you've got, this is that same $400,000 home. So we're looking at a down payment of $20,000, right? And if you scroll down, you'll see the cash to close at the bottom of $26,381. That's basically your down payment and all the closing costs that would be associated with that loan. Okay, so now that shows you bringing $28,000 or $26,381. Now, if you use the hybrid agent program and we gave you that $6,000 credit, if you look right there, it's highlighted in yellow. It says $6,000 contribution. You will see that number on your closing costs or on your closing disclosure, and you would be bringing $6,000 less, and that's roughly about what you would be bringing in this example. And this is just an illustration to show you guys how much difference that it could make. Now, keep in mind, you're either going to buy the house with me or you're going to buy the house with the realtor that you already know, and the only difference is on one you're going to pay more. With me, you're going to pay less. So at the end of the day, you guys make the decision and tell us what makes more sense to you. Okay. Now here is an interest rate example. All right. Same sales price, 400 grand, loan amount 380 because we're putting down $20,000. That's 5%. On one hand, you have 2.875 would be your interest rate. In this scenario, we bought the interest rate down from 2.875 to 2.625. Okay. And so now you're looking at a payment each and every month. You see the payment was $25.34, right? And now the payment is $24.84. Now this is gonna vary on each and every scenario. And actually, these are old rates. Rates are actually lower right now than they were before we put this webinar together. But in this scenario, you see the red box is highlighted. We didn't buy the rate down. I mean, we did not lower the cash to close because we used that money to buy the rate down. And so now you're still bringing $26,381, and on the other side you're bringing $26,373. The same exact deal, but you've got a lower payment each month. Okay, and let's see here. This is assuming that we've got a $12,000 realtor commission, and we're just keeping that number equal at $6,000. Okay, now here's a good one. Pay attention to this one, because most people come in and just say you're in a situation to where you have money to put down, but you don't want to have PMI. All right, and here's an example where I'll show you where a higher interest rate doesn't mean a higher mortgage payment. Okay, so we have same house, 400 grand. We're putting down 20,000. Rates 2.875 on this left side. But look at that payment. It's $25.34, right? Now look at the payment right next to it. It's $24.25. I mean, that's a difference of $100 per month on your actual mortgage payment. And what we did, look at the interest rate. I'm sorry, I skipped over that one. The rate on the right-hand side with no PMI is 2.99. So you have a higher interest rate, but you have a cheaper payment. And the difference is you won't be paying the mortgage insurance each month because we bought out the PMI with the rebate instead of applying it to your closing costs. All right. Instead of applying it to buy the interest rate down. We simply went in and we knocked out the PMI on that deal, and so now your payment is $109 cheaper per month. I mean, and we're talking $109 over the life of the loan, and so that number adds up to be a pretty big number. Okay. Now listen, we understand, hey, everybody knows a real estate agent. Your brother or sister or cousin or aunt or uncle may be one. But does just knowing a real estate agent, does that end up getting you the best deal in real estate? All right. Do they show you their worth? Are they putting their cash on the line? I mean, does that agent know, or that you're possibly related to, or the one that you know, do they get you the best deal? Those are just some of the things that we want to point out to people. And I know this went by real quick. I want to open this up, and if you have any questions, feel free to unmute yourself and start asking away. If there's anything in the chat that you guys want to type in there, please feel free to answer those questions. And I'm going to open this up to everybody else, and just you guys let me know what questions you may have.
Yeah, Mike, can you go into explaining more about this PMI?
Okay. All right. Well, what PMI is, right, is private mortgage insurance. And anytime you're over 80%, anytime you put less down than 20%, the lenders are going to give you what's called PMI. And that's basically to protect their interest in the property in case you don't make the payments. And depending on some situations, I mean, it's not always $100. It could be a lot more. But you can pay out of that. You can buy that money out if you give them, hey, if some of it's they're all going to depend on what the credit score looks like. So if you just buy out of it up front, and if there's enough of the realtor rebate to buy you completely out of it, you just don't have to worry about making that payment each month. The PMI payment, once you get down to 80%, that's just money that you just thrown away. And so let's just say that you were on PMI for 10 years, or you had PMI for 10 years at $109. That's $13,000 that you just basically gave to the lender in case you defaulted on your loan. Did that answer your question? I think.
Yeah, it did. I just wanted to know, like, do you have to have that on your loan? Like, I think you said that they require that.
Yeah, they require it if you don't put down 20%. If you put down 20%, it's not required. It's going away. Because at that point, and the only thing that it is it protects the bank. And the reason it stops at 20% is they'll assume, hey, at 20%, if he defaults, we can sell the property and we can get all of our money back because you got 20% equity in it.
That makes sense.
Okay. Anybody else have any questions out there? Come on, don't be shy. Some of y'all are probably muted. So if you're muted, hit that red button on your phone. Pauline, I see you raising your hand. What question do you have? Unmute yourself. Hit that hit your microphone on your phone or on your computer to open yourself up.
Okay, I have a question.
You go.
You okay?
Yeah, gotcha.
So if you work, do you guys work with FHA? Yes.
Yes, ma'am. We do.
Know how they have the programs where they would pay your closing costs.
Mm-hmm.
So you do work with them as well?
Well, we work with FHA, right? Now, here's what happens with the down. You're talking about a down payment assistance program. And so we can't do it with the down payment assistance programs because as a broker, we don't have access to these programs, but they're kind of in place to help you so you don't need to use these programs. All right. Now here is, let's just say we were going to do an FHA loan, right? With a DPA program. And actually I'm working on a video to get this out to people as well. All right. So you're looking at an interest rate on an FHA right at 3.25%. And that's if you take 3% down payment. Most people are going to go for the 5%. So your rate's going to be 3.875. Right? And a regular FHA loan today, your rate should be 2.75%. So you're going to pay 3.875 versus 2.75 when you do that program. And the difference is for you, 3.75 is not even on my radar in here. I can't even go up that high. And so, I mean, and I've done these programs before, the down payment assistance programs. I used to specialize in them. I've done a ton of them. But what happens is you kind of get stuck in there. And I kind of call it the poor people tax. And it's not the best name for it, but what they're looking at or banking on is someone that you don't have the money to pay for the down payment to get in. So now you got to pay a penalty each month because you didn't have that money. If we can get you out of that by any means, if we can get you out of having to use that down payment system, we love to do that. But I get it. Not everybody has all the money and you want to buy a house. So if that's the program that you're looking for, give us a shout. And I'm connected with a lot of lenders that still do those programs.
But if you guys provide, you said y'all get paid twice, and you guys provide half of the closing costs, we wouldn't need that down payment assistance.
Well, here's the deal. Remember, you have to come up with a down payment, right? So let's just say on a $300,000 home, right? And I don't know if you guys can see this. Yeah, you can see that. All right. So on 300,000 times FHA, we're going to say 3.5%. All right. So you have to have invested 10.5 in your house on FHA. And then the rest of that would typically be your closing costs. We would run you about $4,500 to $5,000. And so 5,000 plus that, plus the 10.5 gives us 15.5. And so, well, that number didn't work out. You'd be looking at 15.5, but if we were able to apply some of those closing costs to it on 300,009, so now we subtract 4,500 from it. That's roughly what you needed at closing.
I like that.
And so, I mean, at the end of the day, the math is the math. You're going to need the money in closing one way or the other. But unless that real estate agent is giving you half that commission, they can't beat the deal. Not to mention, I promise you, if you compare rates to anybody else out there, like some of these big box lenders, like and I'm not picking on anybody, I'm just thinking of like a Supreme Lending or a Guarantee Rate or somebody like that, the people that you may know, their rates are going to be higher than ours. So we're already beating them on the interest rate. Now it's just a matter of making sure that we can help you get into the house for a lot cheaper. And while that number of $5,000 may not seem very big, but moving into a house, everybody wants their own refrigerator. Most people are going to go and buy, I don't know, a couch or some furniture, a TV or whatever. Even if you have the money, that's money that you don't have to spend and you can put on something else. Okay. Anybody else have any other questions? I mean, I'm good. I'm not that good. I know you guys have some questions.
I mean, my only question is like the hardest problem I'm having right now is the inventory. It's not a whole lot of inventory out there.
Yeah.
So,
Now I can't do anything about that one. I mean, that's just a situation to where we would have to find. I got clients in that same situation that are trying to find homes as well.
okay.
Okay, so what I'm doing right now is I've got on our website, highbridgehomes.com. Yeah, we've got, and I'm going to go to it here. Let me see if that pulls up. Okay. For you guys who may be interested, right? And everybody wants to look at houses. So you would go here to hybridagenthomes.com and you would go search. And I'm just going to type in, say, DeSoto. Right. And let's see here. And you see this black bar down here that shows you the potential rebate on each and every house. And now this is every house that's listed in MLS, the same houses that you'll find on Zillow and things of that nature. But let's just see here. So this one here is, I don't know, $495. I actually know where this house is right here. And so for $495, we can put $7,400 towards your closing costs if you were to buy this particular house. You know, and there's nothing. Let's see here. I'll go to Zillow and just pull up this same exact house. Show people, hey, you get the same exact photos and all of that stuff. There it is right there. Now, the difference between Zillow and our website is our website shows you, hey, we're going to give you up to $7,400 towards your closing costs. Everybody loves to go to Zillow, same exact photos. They're all syndicated. The difference is we're going to put you in a much better financial situation. And so I have the link to that in the chat. If anybody wants to go and look at homes, hey, I understand that's the fun part, is looking at houses. Everybody gets excited about the fun part. The loan part sucks. We understand that. We know that. But it's a necessary evil. You have to have it. That is the most important part, though. We always recommend that everybody gets pre-approved before you go out searching, because it's a much better buying experience knowing when you walk into a house that you've already got the money set aside to purchase it, or you've already got the loan approved to purchase that deal. So we got hybridagenthomes.com. That's in the chat. I'll probably text these out as well. Also, for anybody wanting to have like your private appointment, we've got a calendar here as well. I'm going to put that link up here. Give me 1 second. Let me go and grab it. Okay, so I've got that link. All right, it didn't copy. 1 second. Copy link. Okay. All right, so we got that link in there if you want to do an appointment. For those who are looking for just to get a straight pre-approval, you can go to ltimortgage.com. And there is a link there that basically says apply online. And I'm sorry, my chair is squeaking. But does anyone have any other questions? I see there's Sally here. Severa was on last week. Pauline, any other questions from you or anything like that?
No, I'm just looking on the website right now.
Okay. On the home website?
On the Hybrid Agent Home.
Yeah. Okay. See, I told you that's the fun part. That's where everybody wants to go. Looking for houses.
Yeah. I don't have any questions right now.
Okay. All right. Well, if we don't have any other questions, I mean, we can shut it down. If anybody thinks of any questions, feel free to shoot me an email. Just type hybrid agent in the subject. LTI mortgage. I just put my email in the chat, so you guys can copy that. But if there aren't any other questions, I think we can go ahead and get this one finished for the night. Okay. All right, you there?
Yeah.
Anything? Any going once, going twice? All right. Well, hey, man, I appreciate everybody jumping on here. Like I said, we host these every Thursday at 6 o'clock. I think we're going to probably end up moving it to Tuesday at 6:30 instead of Thursdays until if you don't get any other notice, we'll still keep them on Thursday nights. But hey, I appreciate everybody taking time out of their day to come and listen to me. Hey, we're just here to get you the best deal possible.
Yes, sir.
All right. I thank you guys. Y'all have a good night.
You too. Good night.
Thank you.
All right. Thank you. You're welcome. Stop recording.